Hey there, so what the heck happened to US oil markets this week, and what does it mean going forward? On Monday, the May West Texas Intermediate Futures contract, what is commonly understood to be the United States oil price, fell down to a low of negative $36. In this Markets Are Dumb series, we like to take a look at what happens when reality intrudes upon expectations. Well, this week, reality intruded so hard it broke the market and pulled the veil back on what happens to commodities prices when nobody wants to buy what you're selling. The people who buy and sell the highest volumes of oil never see it. This is true of most commodities. Anybody who wants to speculate on the price of oil or copper or coffee beans can buy something called a futures contract. This commits the buyer to purchase a certain amount of a commodity on a certain date. For our purposes, the important date was Tuesday, April 21st, the day that the May WTI futures contracts came due. Futures markets are a good deal for the driller or the miner or the farmer because it allows them to hedge against a fall in the market and make financial plans. And it's good for everyone, from investors to policymakers, to have the information that the futures markets provide. Normally, it looks like a futures contract has the same amount of risk as a stock or a bond. The prices go up, the prices go down, but at the end of the month, there's almost always somebody who wants to take physical delivery of that oil at some price. This allows oil traders to sell their investments in the last month's futures contracts and then buy new investments in the next month's futures contracts, allowing speculation to merrily continue. What happened on Monday was that for the first time in a while, maybe ever, the oil traders were forcibly reminded of the contract part of the futures contract. People who held these securities couldn't get rid of them. Because of coronavirus demand destruction, all the refiners or tankers or whatever who would normally take physical delivery of this oil already have more than they need. A bunch of people with no infrastructure beyond their laptops were faced with the requirement to physically pick up millions and millions of barrels of oil. And that's why the WTI oil price fell into the negative 30s on Monday. Oil traders were willing to pay a lot of money to get rid of that responsibility to take physical delivery. On Tuesday, the WTI price that we all follow shifted over to the June contracts, which are now trading in the much more sane-looking mid-teens. But those prices are still incredibly low, and unless a whole bunch of US companies stop production or build a whole bunch more storage, it's very likely that we'll find ourselves in the exact same situation on May 19th when the June contracts expire. What's interesting is how much of a US problem this is. WTI went negative, but Brent and other international prices did not. Russia and Saudi Arabia have very serious long-term problems due to these low oil prices, but they are much better positioned in the short term. Their more consolidated industries are capable of cutting production for a couple months and surviving. The many smaller companies in the United States cannot. If they stop pumping, they go out of business, which honestly, most of them should have done years ago anyway. Over the next month or so, a bunch of rich people, probably including our president, are going to tell you that we should be more like Saudi Arabia and Russia. We should form a cartel to control our output and therefore save all of our country's terrible oil investments. Ignore them. This would be the next step towards turning the United States into a petrostate, and a petrostate is not a good thing to be. As far as what this means in the long term, I've already laid out my expectations a couple of times, and I don't want to bore you by being repetitive. But briefly, the oil prices will remain in the toilet until the U.S. industry consolidates and shrinks significantly. Once this happens, whether it takes 1 year or 5 years, we will see a brief spike in oil prices. But this will be followed by an electric car explosion and the end of the current petrostate model. The coronavirus oil crisis is just an acceleration of things that were already going to happen. Thanks for watching. Please subscribe. And if you want my detailed oil predictions, check out How the Oil Market Dies from fall 2018 and the recent update video, Saudi Arabia Goes to War. Thanks.